And welcome into the round table. And as you know, unless you had your head under a rock, the Red Sea is becoming a major point of contention in terms of how shipping is handled through that particular region. And of course, with the Suez Canal, how is this affecting the entire shipping industry as a whole? We got two experts that can speak to that as well. Greg Miller joins us, our senior editor and award-winning journalist, I should mention as well. Greg, thanks so much for joining us, as well as Dr. Sal Mercogliano, associate professor of history at Campbell University in Buies Creek, North Carolina. Gentlemen, this has been a very, very, very interesting situation to follow for multiple reasons. But Sal, we know that there's been some protection put in place. We know that the U.S. military has gotten involved a little bit here. What is the latest right now in terms of how dangerous it is to put a ship right now through the southern Red Sea? I think, Sal, you might be muted. Check, check, check. There we go. Maybe? Nope. All right. Greg, let me switch to you, and we'll work on Sal's audio here in just a bit. Greg, as you look at it, you wrote a piece about rates and how much they've, this conflict has pushed rates up in this way. What have you seen initially in terms of how much more it's costing to get a ship through that area?
Yeah, just in the last couple of days, the rates have skyrocketed. If you look at the Shanghai Containerized Freight Index, last week it went up 40% week on week. It's only the fourth time that's happened since 2009. It's now at the highest level since October 22, and that's a global index. If you look at some of the other index providers, Platts has the rate from North Asia to the Med at 5,000 per FEU right now. It has doubled since December 26th. 4,500 North Asia to North Europe, up 150% since December 26th. And it's also affecting the East Coast routes. Remember, a lot of most of the services that went to Asia to the East Coast switched to the Suez, so now they're in the mix here. Platts has Southeast Asia to the East Coast 4,100, North Asia to East Coast 3,800. The FBX index shot up 80% yesterday for Asia to the Med to 5,157. So we're seeing some really extreme spot rate moves, particularly from Asia to Europe, but also from Asia to the East Coast and even Asia to the West Coast, because it's all connected.
Does that also include insurance costs? Obviously, with the dangers of even attempting to go through there, you're going to have that tacked on, certainly. But now that people are avoiding that, does that insurance cost also go up?
Yeah, a lot of the costs are going up. And it's interesting when you look at shipping investors, when they look at container shipping stocks like Zim, there seems to be sort of a simplistic spot rates going up. Therefore, the carrier profits are going to go up. And I don't think it's quite a parallel connection there. A lot of the container line costs are going up significantly, particularly on the fuel side, because they have to expend more fuel with these longer routes. Now they're saving on the canal transits, but the other thing to consider is when you look at container line profits, it's the rates times the volume. And if you look at what's happened recently, the volumes are going to be heavily affected in the near term before they can rejuggle their services and take into account these new routes. You're going to lose 10 days, 2 weeks going around the Cape of Good Hope. If you look at what Maersk just did, they decided to go around the Cape of Good Hope, then they changed their mind, then they moved their ships back towards the Suez, then they stopped, then they changed their mind again, and now they're going back around the Cape of Good Hope. That's taking a lot of time. It's going to affect the volumes, in the next quarter or two. So I think, people should be cautious on assuming that, it is going to be a lot more expensive for the cargo shippers. That's for sure. But I think there's going to be some translation issues into how this goes into carrier profits. Consider the fact that, CMA and Costco and Maersk attempted to get back through that shorter Suez route. If it was so profitable for the container lines to all go around the Cape of Good Hope, why are some of them trying to get back through the Suez?
It's a good question to ask. Sal, I think hopefully we got you back here in terms of looking at how dangerous that situation is. Obviously, you've got container ships going around the Cape of Good Hope. I believe I heard you mention on another network there that with that extra travel time, that basically eliminates one voyage per year, which of course is millions of dollars in revenue there as well. So when you look at it, how dangerous is the situation and how expensive is it as well?
The spot rates going up all of a sudden, but the other issue you have is really the repositioning of empty containers too. This is going to throw a huge kind of problem within the entire system. One of the reasons I think Maersk was so wholeheartedly trying to get ships back through the Red Sea and out was to really get those empties repositioned, because again, the whole system depends on the movement of these boxes. And if the boxes all of a sudden take a 2 to 3 week gap out of the system, it's going to create a global disruption across it. We've seen some of the shipping lines still try to push through. CMA CGM, for example, just ran 2 ships through the Suez Canal. So they seem to be able to get through. The targeted ships right now really do seem to be those with Israeli connections. Mediterranean Shipping Company, they have connections to Israel through the ownership. The wife of the owner, Aponte, it has Israeli citizenship. And then Maersk has a lot of service through Zim to Israel. And matter of fact, it's one of the reasons why we
think we may have lost Sal just a bit there, unfortunately. There, it's going to be a tough road to hoe as well. So, Greg, let me jump back to you. In terms of, does this affect all carriers the same way, or is this just affecting, as Sal mentioned, kind of just those carriers, obviously with the Israeli flag? But if you just don't want to be a part of it as well, obviously you have the option of going around the Horn of Africa.
Yeah, I mean, speaking of CMA CGM, one of their ships was just targeted yesterday. So, there does seem to be a bit of indiscriminate. And speaking of, for example, COSCO, the Chinese carrier, you wouldn't think they would be targeted, but one of the ships they owned, the OOCL number 9, was targeted a couple weeks ago. So, from a container line perspective, is it really worth the risk? These are very, very high profile companies. So a lot of them are deciding, for now, let's just change our route, and it's going to take time to adjust. And I think some companies are in much better position to deal with this than others. Primarily MSC. MSC is the largest container line in the world. It has an enormous number of ships, and let's not forget, all of these new buildings are being delivered right now, particularly for MSC. So there's ships plowing out of the shipyards right now, and so if you have more excess capacity, you have the ability, after these initial disruptions, to change your services to longer routes and add ships into those routes so that you can continue to maintain weekly service. So the bigger companies like MSC, I think, is in a pretty good situation. Whereas, for example, Maersk is a little shorter ships, so they may have some issues.
Yeah, going into that, Sal, I think we got you back here in terms of how the market's going to respond to this as well. Greg just mentioned, of course, the plethora of new ships that are coming online. Of course, already mentioning, of course, that this longer trip means one more voyage. But if you've got more ships, obviously you can hopefully make up the volume difference there as well.
Yeah, I mean, it's one of the advantages the container lines have is the ability to really suck up this extra containers now. So you can load your ships more, you can throw more ships onto the route. This is a big advantage. Now, one of the big problems we're going to have is we're having the first reportings at the end of the year on emissions, and this is going to be a big issue on emissions. Let's remember, as of 2023, you have to start reporting on CII and all your carbon emissions. And Clarkson just came out with a report that they believe about 30% of the world's fleet is going to be in problems with this. So while you can run these ships on the longer routes, you're going to have the emissions. And you alluded to it a little bit before, but it's a really important one to make the note of, is can South Africa handle these extra ships coming in? Fuel is very expensive down in South Africa. They have very limited storage of fuel down there. The bunkering capacity is limited, and a lot of problems in the shore facilities in South Africa. So this is not a solution that's really a good long-term one, especially as we start getting into later months and we start shifting drifting over into winter down there. There's not a lot of container space down there to reload containers that need to go either to Europe or North America. And the question is, we just don't know how long this is going to go on for. And it does seem like Maersk is driving this. They're the ones that keep trying to push through the Red Sea and try to get some action. The question is, will they try that again anytime soon?
Greg, looking at this, how much of a concern is this for the companies themselves? Obviously, they're going to make the decision as to whether or not they want to go around Africa or not and avoid the Suez Canal in the first place. Is this more of a nuisance, or is this a bigger problem that they simply have to try and manage as so long as there's difficulty in the South Red Sea?
Well, I mean, I think from, if you think about the cargo shipper's perspective, this is a much more extreme disruption than the Ever Given accident. However, at that time, capacity was very tight. Same with the supply chain. Right now, again, we have all of this new capacity coming online, so there is going to be the ability to adjust to this. I think from a shipper perspective, though, if you think about it, this is happening right as annual contracts are renewed. I mean, it's going to be very interesting in the European market to see what happens with those contracts, because a lot of those renewed on January 1st, and it seems likely that a lot of the large shippers had negotiated their annual contracts before this really, spiraled out of control. And I wonder to what extent the carriers are going to say, let's have a do-over there. But it just, on the Trans-Pacific side, where you're talking about negotiations starting, next month and the month after, and for contracts starting May 1st, it seems more and more likely that these disruptions are going to go into that contract negotiation period. And, we talk about the spot rates, but, the real issue here is what happens with these annual contracts. And it just seems that this is going to play into the liners' hands and allow them a better negotiating position. And they're going to have better annual contract rates this year than we would have thought just 2 months ago. And it's possible that because of this situation in the Red Sea, the finances for the container lines, while they won't be so good, I mean, they still have all this capacity coming online. It's not going to be as dire, perhaps, as we thought. And for the importers, including the U.S. importers, they should perhaps budget for spending more money this year than they thought, all because of this situation in the Red Sea.
Sal, very quickly, how long do you think this is going to last in terms of protection, in terms of how dangerous the situation is? Could this be here another year from now?
That's the big variable, because this is all dependent on peace in the Middle East between Israel and Hamas. And what we've seen is the Biden administration's hesitation to strike at the Houthi. And the Houthi have been attacked by the Saudis for 10 years. So even if you launch a strike, and we saw rumors about that, about a U.S.-UK strike, I'm not exactly sure that does anything at all to deter the Houthi from continuing attacking container ships that they see as affiliated with Israel.
Definitely a situation to keep a close eye on. Gentlemen, thanks so much for joining us for our roundtable.
Thank you.
Thanks for having us.
All right. We will take a short break and come back and wrap up this edition of Freightwaves Now after this.